SanDisk's stock price surged an extraordinary 1,747% over the past year, while Western Digital gained 455%, driven by a severe shortage of memory and storage hardware essential for AI data centers. So the question is, what is causing this hardware bottleneck? And how are these shifts reshaping the technology supply landscape? Let's solve this equation. Welcome back, strategists. This is the Resource Equation, your briefing room where data, capital, and strategy collide. New here? Subscribe for weekly breakdowns of what's really moving markets. Throughout 2025 and into early 2020s, SanDisk and Western Digital have seen unprecedented increases in their stock prices. SanDisk opened 2026 at an all-time high of $650 per share, representing more than a 100% rise from $36 a year earlier. Western Digital's shares climbed 455% over a similar period. These gains coincide with a surge in demand for memory storage solutions, particularly 3D NAND flash memory, which has become a critical component in AI infrastructure. SanDisk reported a 7.7-fold increase in profits year over year, reaching $803 million, fueled by a 76% revenue growth from AI data centers and hyperscalers. This hardware shortage matters because memory and storage chips have become the primary bottlenecks in AI development and deployment. As AI models grow larger and more complex, the need for fast, reliable, and high-capacity storage grows accordingly. Hyperscale data centers that power AI applications require vast amounts of NAND flash memory and solid-state drives to handle the enormous data loads. The shortage has driven lead times higher and pushed prices upward, with SanDisk planning to double the cost of its 3D NAND enterprise SSDs in early 2020s. Here's where it gets interesting. While software companies, particularly those operating on software-as-a-service models, have seen stagnating or declining valuations, investors have shifted focus toward hardware manufacturers. The iShares Semiconductor ETF is up about 13% year-to-date, but the real growth leaders are memory and storage companies like SanDisk and Western Digital. This shift highlights a market reevaluation of what components are critical in the AI supply chain. Three numbers tell the story. First, SanDisk's staggering 1,747% stock surge. Second, Western Digital's 455% gain. And third, Western Digital's current valuation at 25.5 times. Trailing price-to-earnings ratio, which some analysts consider reasonable given the multi-year commercial agreements it has secured through 2020. JPMorgan recently raised Western Digital's price target to $320, reflecting expectations of sustained demand. Surface level, this shortage is a simple case of supply struggling to meet demand. But dig deeper, and it's clear that the AI revolution is exposing new limits in commodity hardware supply chains. Memory and storage, once considered standardized and commoditized, have become precious resources. The urgency to build new AI data centers and upgrade existing ones is driving companies to pay more for these components, which in turn fuels further price increases. Here's what this really means. The AI boom isn't just about faster processors or more sophisticated algorithms. It's about the entire ecosystem of hardware, including memory and storage, which must scale in capacity and speed to keep pace. The shortage also intersects with emerging technologies like quantum computing, prompting some firms to adopt harvest now, decrypt later strategies. This approach involves capturing large volumes of encrypted data today, anticipating that future quantum computers will be able to decrypt it, thereby increasing current storage demands. Pause here. Does this make sense? Drop your take in the comments. While the rapid price increases and supply constraints are clear, what remains uncertain is the timeline for normalization. It's not yet known when or if memory and storage supplies will catch up with demand. The continuing rollout of AI-native applications and enterprise AI agents suggests that demand could further intensify. Additionally, it's unclear how price increases for enterprise-grade 3D NAND will affect consumer products, given that they are often produced in the same manufacturing facilities. Remember that question about the hardware bottleneck timeline? We're getting closer. Real talk. What's your hypothesis on why SanDisk and Western Digital have maintained such strong momentum despite the elevated prices? Returning to our opening questions, we now understand that the hardware shortage is primarily driven by the extraordinary demand for AI infrastructure, which has transformed memory and storage chips from commodities into scarce resources. The rapid stock price increases reflect this shift, but it remains unknown when supply chains will stabilize or if prices will plateau. But wait, there's a twist. Western Digital's long-term commercial agreements through 2028 suggest that these companies are not merely benefiting from short-term spikes, but are positioned for sustained demand. This raises questions about how the AI hardware market will evolve over the next several years and whether other players might enter or disrupt this space. But looking ahead, upcoming earnings reports from SanDisk and Western Digital, along with updates on new product launches such as next-generation 3D NAND technology, will provide further insight. Analysts and market watchers will also monitor the iShares Semiconductor ETF's performance and broader semiconductor supply trends throughout 2026. How do you interpret this hardware surge? Who do you think is most affected by these supply constraints? The data center operators, hardware manufacturers, or end consumers? What signals are you watching for signs of easing or worsening shortages? Let me know in the comments. And if you found this valuable, hit that like button. Now, while this memory and storage shortage is grabbing headlines, there's another equation being solved in real time. Why SanDisk surged 28% in one day. The Jensen Huang effect. If you think today's story matters, you need to see what we uncovered there. Link in the description. Watch it next. Subscribe to the Resource Equation for weekly breakdowns like this. Next up, how semiconductor supply chains are adapting to the AI era. See you in the next one. Quick reminder. This video reports and explains public information. It does not offer investment advice.